Hello everybody, welcome back to our channel. So continuing on from our last week's vlog of myself and Mauro, we discussed about the financial world and overall the economy and what's happening in the business and the political world. So we're expanding that particular topic today, and Mauro's here joined with me from Shanghai. I'm here in Indonesia. We're going to be talking about two main points that Mauro will discuss, which will be the EU and the Chinese trade agreement. And comprehensively discuss about the trade agreement between EU and China, whereas I'll focus on the recent stock market rally that we have experienced after the coronavirus crash back in March, April of last year, 2020. And I will also focus on why there are other markets out there for investment and business other than just the Chinese market. So starting off, Mauro, welcome back to the channel. Mauro, if you would explain to our viewers as to why and what's happening with the EU and the Chinese trade agreement.
Well, this has been quite a debated issue for a long time between the European Union and China, but this is basically the same subject also between the US and China that was at the core of the trade war itself, which basically dates back to the beginning, to half basically the midterm of the Trump administration. On this side, instead, the EU was more or less more silent. It wasn't as vocal as the US administration used to be. Then we will see what will happen now with after the transition next week. However, despite the European Union was less vocal, as I was saying, less open in criticizing the status quo. However, they actually struck this deal at the end of December 2020 between the 27 now European nations, as now the UK will manage all of these matters by itself.
Yes.
And of course the Chinese government. This is not actually a trade deal, but this is focused between on the investments. In fact,
right.
The exact name of this is Comprehensive Agreement on Investment, CAI, and this focuses especially on the level playing field between Chinese companies and European companies investing in China. Together with all the issues related to the forced transfer of technology, which is another very sensitive issue, and some of the limitations that there were before have now will be now progressively lifted. This is welcomed by the European Union as being basically the most ambitious deal that the Chinese government has ever signed. But on the other hand, some other governments, some other think tanks and experts are quite skeptical on this, saying that probably this will not have the outcomes that we are all foreseeing. But honestly, this only history will be able to tell. As the things that we know for now, this is indeed at least on paper, the most ambitious deal on investments that involves China and another partner, despite China being labeled since 2019, I believe, by the European Union as a systemic rival. But now, like, we are going towards a better cooperation, which I mean, of course, it doesn't hurt. Going now a little bit point by point. Now, basically, some equity caps and joint venture requirements are lifted, and some will be lifted on time to time. We know that despite from China, Chinese people can come to Europe and basically open a company in any sector without any special limitation, despite apart from some like special sectors which might entail so-called, at least in Italy, is called golden power, which basically limits foreign investment in strategic sectors. But otherwise, there are no other special such limitations. In China, instead, for many sectors, the WUFI, the only foreign-owned enterprise, doesn't apply. And you need to open a joint venture with a Chinese partner. And usually this Chinese partner will require, and of course will know because he's involved in the venture itself, all the technology that you are bringing to the country itself. This was kind of acceptable at the beginning, as China was basically developing from scratch, I mean, from the opening of 1978. But now that China is almost becoming the first superpower, and of course it has another stance now, many believe that this advantage is not justified anymore by the previous conditions. Therefore, this is a step forward to this claimed level playing field, and definitely it's something that we can welcome and that we can look into with quite an interest, especially for the years coming. For example, there will be less restrictions to manufacturing, to the automotive sector, also in financial services, in health, which is on my point of view something that really interests me, because health here it will be paramount to be developed effectively and to offer a very improved qualitative service, as the Chinese population is aging quite rapidly. And all of this are very meaningful progress. And it is a good time for those that have an interest in all of these sectors to open this trade deal and this investment deal, and see if their category is included and what they can do now that they couldn't do yesterday. And of course, they can also, call us and see how we can help them in this. Of course, as far as we are able to do, at this point, we can only welcome this positive news, but we also need to remember that China is a very special place, and that despite the possibility of entering all these sectors by yourself, just with a foreign entity, having a Chinese partner might not be the worst idea to navigate the Chinese market, which might be seen from the external point of view as an homogeneous country an homogeneous entity. But however, navigating the 22 provinces, the 5 autonomous regions, and all other such divisions
Yes.
can be much more challenging than anyone can foresee. So, eventually it's good that we have this opportunity, but eventually it might not be the worst idea in the world to keep going with previous rules and having actually a person that you trust, of course, that knows the market and has that advantage. So eventually, as usual, is a question, an issue of balance.
I understand. Okay, thank you so much, Mauro, for that particular insight. And it was a very detailed insight of what the trade deal is about and what the whole comprehensive agreement between the two governments. The European Central Government representing the whole EU, and also the Chinese government. And we've always maintained that China is one of the best places to business in the world, as the economy is opening up to foreign and institutional investors, especially since the start of last year. The financial sector has been opening up, the insurance sector has been opening up. So more doors and more possibilities are opening up for China and for international investors into the Chinese market. Excellent. So staying on that particular topic, I'm going to focus on the recent stock market rally from just after the March financial crisis in 2020, the coronavirus pandemic crisis, and how the tech boom rallied the stock market across the globe, namely the S&P 500 and Dow Jones and NASDAQ, and how that particular rally fueled overall global economy in terms of stock markets, not necessarily the global economy as a GDP growth. So many of my clients wonder, many of the people, I even write articles once a week, the Rishi's Opinions. I wrote an article, I think it was last week or the week before that. And my article, the topic was, is 2021 the year of making money? Well, there are two ways to look into it, yes and no. Yes, because we're still recovering from the financial crisis. So there's a lot of opportunities available which are cheaper price points, investments available which are quite relatively cheap compared to the pre-pandemic levels. So therefore, there's a huge opportunity, especially in the emerging markets, to invest and to also grow your money. No, because there's still uncertainty revolving the overall global world economy. We're still living in uncertain times in terms of the new normal is these days, if you want to take a flight, you still have to present a negative coronavirus COVID test. All these masks and everything, quite a lot of restrictions, borders being closed across the globe. So people are not able to travel as much for business. Therefore, a lot of hospitality and tourism sector has been suffering, and which was also fueled by business travelers as well. So by that, I mean hotels, Airbnbs, we have your restaurants, everything of such, airlines, they're suffering, and also malls as well, because there's less footfall. Let me say in a way that even after the coronavirus, how China was able to handle that pandemic, there was a time in Shanghai, Beijing, Guangzhou, Shenzhen, all the major cities of China, there's a lot of footfall in the malls, but those people are not necessarily spending money in the malls. They're spending mostly on food, maybe bringing their kids for a Saturday out or a Sunday out and just spending time with their family, maybe watching a movie. Cinemas were also shut for a considerable amount of time in Shanghai as well, and most of the other Chinese cities. So therefore, overall, the global economy, there's quite a lot of movement. There will be a lot of movement going forward in the next 6 months to 1 year. There will be a lot of uncertainty in the markets. There will be a lot of volatility in the markets. Go.
Oh, okay.
Go.
Okay. As I was saying, there are too many unknowns in this time, as you cannot foresee how the distribution of the vaccine will go
Exactly.
in this case. Sorry, what?
Exactly. And also the fact is, because the richer countries are getting the vaccines, there's still a lot of poor emerging nations that are yet to receive the vaccines, are yet to receive the ample amount of doses, ample amount of quantity required for their population. So we might, for example, here in Indonesia, the Prime Minister, the President has said that anybody under 59 will not receive the vaccine due to health concerns. I believe it's just a strategy for him to not give it to the elders. He wants to focus on the younger generation of the population who he believes are the future of the country. So anybody who is under 59 receives a vaccine for free in Indonesia, but anybody who's over 59, maybe in the future they might be able to, but that vaccine will cost them anywhere from $500 to $700 per jab, per dose. So there's a lot of political games, or there's a lot of political uncertainty as well when regarding the vaccines as well. And then there's a different tier system for the distribution of the vaccine. For example, in Ireland, there's different categories. You have to be at the high risk category, so the hospital frontline workers, doctors and staff, nurses, so on and so forth. Then maybe you have your people who are more so exposed, like the airport itself, the staff at the airport who are exposed to foreigners and travelers coming into the country. Then there are teachers who have to teach. So there's so many different categories. And we live in a world with 7+ billion people. And then they say that we need at least 2 doses for the vaccine. So we need to come up with 14 billion doses of those vaccines. And most of the countries producing those vaccines, they don't necessarily have the production capacity. Yes, India is one of those bigger production capacity centers in the world. Maybe so is US, so is UK, but still it takes time to come up with so many doses of the vaccines. And then we'll have some people who would not necessarily want to get themselves vaccinated. So there's a lot of uncertainty in the market. And going back to my point, how the tech industry was fueled, the rally, how the tech industry fueled the rally overall in the global economy and the stock markets, was the fact that during the pandemic, during the lockdowns, a lot of people are ordering online. A lot of people are ordering everything online: food, their parcels, their deliveries, medicines, so on and so forth, clothes, whatever, all the basic necessities. Therefore, a lot of tech companies that offer products which can be delivered. For example, a lot of people were buying Apple products for their work from home purposes. A lot of people were necessarily Elima and Meitun and all them had a good quarter last year, good 2 quarters last year, because a lot of people are ordering their food in Shanghai, in China, over those particular apps. So a lot of tech companies, they had a fuel, and that fuel was people willing to utilize their technology.